All right, welcome guys. Welcome back to Decent Talks. I am here with Carter
Hello, hello.
and Victor.
Hello, hello.
Myself, Riley. Welcome guys. Today we're gonna talk about like security hacks, some scams, things that happen in the space. Where should we begin on this? We had this really big hack that happened probably it was like a week ago on Axie Infinity, like a blockchain based game that people play. It was a really big hack. It was roughly correct me if I'm wrong, it's like 620 million roughly.
Yeah.
And it was like 595 was Ethereum, and then the rest of it was in USDC. Yeah, so it was a really big hack. What do you guys first have to say? Like first thoughts on this?
Well, I've been doing a bit of research on the Ronin hack, and it kind of reflects a pattern that we've seen in DeFi. It was a bridge hack, so it's the bridge that gets you from the Ethereum base layer onto the Ronin side chain, which is what Axie Infinity runs on, right? And so it kind of is like a weak point in the armor of the whole DeFi and layer 2 and sidechain ecosystem, right? Because the underlying like blockchain of the Ronin sidechain or of these other sidechains is usually pretty secure. It's very decentralized. There's like lots of validators, etc. It's very hard to attack the chain. But the bridge where you get from Ethereum onto Ronin, that is the weak spot. And so that's why it seems like a lot of bridge hacks are happening lately, because it's a weak point. The way that things are being done right now has security flaws. That mostly has to do with multi-sig wallets, right? It's a very easy thing to set up a multi-sig wallet and to just say, okay, everybody trust that these people who have this multi-sig wallet are going to do the right thing and that they're going to manage your funds while you're off doing stuff on the side chain, right? And then that money will be there when you come back for it, right? But the problem is that with a multi-sig wallet, you just need to have some of the validators in the multi-sig to gain control over everything. And that's what happened here. There were 9 participants in this multi-sig wallet, and it's a 5 of 9, which means that you need 5 of those participants to agree to something before it goes through, right? You need 5 out of those 9. And so what happened was 4 of them were compromised at the same time, and those 4 belonged to the Ronin team themselves. So those validators were compromised at the same time, and then separately, the Axie DAO validator was also compromised. So they got their 5 that they needed, right? Wow. So they were able to get control of those, and then they were able to approve any messages or any requests to that contract that attacker wanted. So that it's really interesting how they're exploiting a weak point in the system, right? Where everything else is really strong and everything else is really secure, but it only just takes one vulnerability to get in there.
And then that weak spot is the bridge, as you mentioned, right? And the bridge is something that is what connects the users with their tokens in the game, and they want to withdraw it or move it to Ethereum or outside of the game, right? That's what the bridge is.
Yes, exactly.
Okay. So that's the weak spot. Not just for this, but particularly, but in the whole industry in general, you say that's a weak part.
Yeah.
In terms of
there are some projects that do it differently. Like Cosmos has a completely different system for their interoperability. So they do this kind of crazy thing where they simulate the different chains, and then that's how they move them across. They can simulate the consensus on one chain, and then they can reproduce it on the other chain, and then go from there. And it's a bit more secure. A bit above my technical pay grade, but it goes to show that there are other ways of doing this. But the multi-sig wallet is very popular because it's easy. It's easy to set up. The downside being just that it has these security flaws.
Right.
So, yeah, and so the hacker knew that. And what's interesting is that this isn't necessarily a smart contract hack per se. This is like a social hack. This is like a social engineering hack. Really, it's the people that were at fault here. Because the contract functioned exactly as intended. Right. The contract, wasn't manipulated in a different way. It was simply that the hacker had access to things off chain, to these servers, to these validators, right? So how exactly that happened, details are not clear yet. Some people are thinking that maybe their key management system was compromised, like a password kind of manager. Uh, at Ronin's team, there's a chance that someone got access to the keys of these validators through their like database that they had at their headquarters, wherever that is, and then use that to their advantage. So it's like hacking the person, not necessarily hacking the system.
Yeah, I heard like possibly this person also maybe could have been spamming. Was it the DAO or was it trying to get some access information, right? Or
Well,
something? I don't know. Correct me if I'm wrong here, but yeah.
Yeah, like the validators, if you have access to the validators, you can approve any message that you want. You can approve any transaction that you want. So how do you but they themselves don't generate the transactions. So how do you get a transaction on there so that it can be approved and you can steal everybody's money? Well, that comes from the attacker found a connection to the blockchain, a server that was connected to the blockchain that wasn't being used anymore. At one time, it was used for I think I heard that it was like a gas covered node. So like you would use this node and you didn't have to pay any gas costs.
Oh, gasless, yeah.
It was like a gasless node.
Gasless node, yeah.
Yeah, exactly. A
I heard
gasless
that.
node.
Yeah.
But it wasn't being used anymore, and it hadn't been used in a couple of years. But it wasn't removed as a whitelisted connection to these to the smart contract. It wasn't removed. Nobody cleaned up after themselves here. It was just forgotten about. And this attacker found it, and he got access to it. So he got that node to spin up a transaction that, of course, drained all the money from the smart contract. And then because he had access to 5 of those 9 validators, it got approved.
Wow.
So he was able to drain the entirety or most of the money in the contract, right? That 620 million, right, of money.
In just 2 transactions, I heard.
I think so, yeah.
Because one was
for
Ethereum,
one
yeah.
was for USDC.
Yeah.
And the USDC was the relatively small part of it, and small being $25 million.
It's still a big number.
Still a huge number. But yeah, definitely most of it was in the ether, right? That was locked in the contract.
But I think the big problem is though, like they have the address for this Ethereum where it's sitting in.
Sure.
So you can't really move. Like, what are the things?
It's
what
very difficult to launder $600 million of crypto, right?
So what are the steps now then? Because I know the team, like, they're working with government agencies. They're trying to find and they're trying to look to see if they can find this person possibly. And like, what are some steps now, right?
Well, that's kind of what I want to ask you guys. Like,
Yeah.
I mean, there's lots of companies like Chainalysis and CoinFirm that will like do blockchain analytics, and they'll track these addresses as they go around the web. And Chainalysis in particular is very good at their job. They can even demix certain like, you know how there are those services that will like coin joins where they'll mix transactions together to like kind of obscure the outputs, right? So a bunch of people pay into a coin join, transactions get jumbled and shuffled around, and then what comes out on the outside, is hard to kind of trace your way through it because it all gets mixed up together in a few wallets.
Right.
However, Chainalysis figured out a way to demix some of these services and to like fully trace through the funds through one of these like things. Ethereum has something like it called Tornado Cash, which is very used for money laundering and for privacy. I won't discount it, but definitely a risk of money laundering through some of these things. And then after that, it's a reliance on exchanges to alert authorities when people are from these bad addresses are trying to buy like Monero and Grin and other privacy coins, right?
Right.
Because once they go into privacy coins, like it's gone.
Because
right?
you just can't trace that.
You just can't trace
There's nowhere you can go.
You can only trace when they turn into that coin, and then maybe when they come out when they sell their Monero into something like Bitcoin, and even then that's really hard to say.
It's really hard to say like if that's who it is.
If it's the same one, because right, it's really hard to prove. So if it gets that far, then you really have to rely on other sources of information to catch them. But what I want to ask you guys, because that's all law enforcement's job, right, is to try and figure out where that money is going. What I want to ask you guys is, what do you think Ronin does now? Like the team behind Ronin and the team behind Axie, like the Axie DAO and the Ronin bridge, like the Ronin sidechain team. What do you think they do now that everyone's money's been stolen? And do they refund them? Like, can they refund them? Can they? What do they do? Do they shut down? Like, what do you guys think is gonna happen?
I think a big outcome could probably be like they can probably refund. I think they can probably refund it because they have the address. They know where all the money is.
600
It's a lot of money. But the thing is, the hacker can't really move that. Not really. And if he does, like, he's gonna just be more at risk of being exposed based off the transactions he's trying to move it out of. But I don't know, unless the money's just sitting there, like, there must be some sort of way they can, cooperate and get,
So do you think he's gonna give it back?
It's tough though, right? Like, I wasn't there a situation last year with there was a blockchain last year that got hacked, and the hacker actually gave back a good amount of the money. What was that one?
Poly network.
Yeah. So like there are situations in the past where the hacker does give back because they can't. I don't know. It's either that or they get in more trouble, right? So I don't know. I think it's in a situation like that where if he doesn't comply or whoever it is, they don't comply, or they could get in more trouble if they end up finding out who this is. And it's possible they could find out who this is, given how big of a hack it was, and a lot of people investigating into it. So I think there should be at least some sort of refund. But who knows, though, since it's in a wallet, if this hacker really disappears or something and just doesn't move the money, then it's gone forever, right? That's bad.
I think it will depend on several factors. The first factor is the number of addresses that were affected. The second one, it would be the amount of money that was lost. The third one would be if the company or the companies have like a security fund in order to cover the amount of money that was lost, even in the event of not being recovered. And eventually also how the people affected will take action.
Yeah.
Because if they decide to take action against the company, that also can affect the decision. And so far I don't have any outcome, but it will all depend on these like four factors. Hopefully everything gets solved in a good way for the company and the people affected. And this also shows us that right now the rise of these technologies on the blockchain is still relatively new, and there is a lot of vulnerabilities that we will encounter, and therefore we need to be prepared for outcomes to solve these kind of problems and invest a little bit more in cybersecurity in terms of allowing extra security for these kind of breaches. Another advantage that I would say for some blockchains and some projects that are public is people can actually look at some of these vulnerabilities and tell them before they happen. There have been cases that people have found vulnerabilities, and they tell the companies or the developers, and nothing happens.
Yeah.
But when it comes to something that is developed privately, sometimes you don't have enough people or enough talent to look at these vulnerabilities, and then something like this is more likely to happen.
Yeah, it's one of the big things for some of these blockchains. They offer bounties, right, for people that can find anything that's wrong, any bugs or anything wrong within the network, right? And if they find that, they get rewarded. So sometimes they offer incentives for trying to find any problems.
Yeah, like a bug bounty.
Yeah, bug bounty. Yeah.
Yeah, and then the question is, how much do you pay in the bug bounty?
Right.
Because if you pay a lot of money, then you really eat into the money that was recovered and you save, right? And so it's like, well, where does that money come from, right?
Yeah.
And then if you don't pay enough, then the hacker who brought up the vulnerability might feel a little cheated, and next time that there's a vulnerability, they might consider exploiting it and getting more money from exploiting it than they would have gotten in the bug bounty, right? The reward doesn't quite match the morality, right?
Right, but then it's an ethical thing too, right? Like
It
most
is.
people would want to do what's good, right? And
Oh sure.
they wouldn't
right?
want to.
If you had a vulnerability that could be exploited for $100 million, and I pay you $50 as a bug bounty, would you not feel very upset? I think I would be like, you cheap bastard. Like,
Well,
Right.
maybe you can put it on your resume though. You can get a recommendation.
I was
letter.
paid $50 for finding a hack in Coinbase. Right? Oh man. So yeah, no, you'd feel it. So definitely, it's a balancing act, I think, right?
Right.
And I think generally you want to err on the expensive and safe side, right? That way, if you pay a really high bug bounty, then you know that other people are gonna want to find vulnerabilities in your code, and they're gonna help because they know if I find vulnerabilities, I'm gonna get paid well for it.
Exactly.
Right? So, but that brings me to another hack that happened not too long ago. Well, it almost happened. It was a hack that didn't happen because it was caught. So I was a user on MinSwap, which is a leading DEX on Cardano right now. In fact, they overtook SundaySwap, which had a lot of marketing behind it, right? But MinSwap has overtaken them now, which is awesome to see. And I've supported them for a long time. I was part of their initial stake pool offering, and I've been following the project for a while. And I was using it. And recently, it came out that there was a vulnerability in the DEX that was pointed out by some users in the community. And there was a group of people called the Wing Riders. And they were a team that was building and launching their own DEX on Cardano. It's not out yet, but they're working on it. And it was a group of people, a group of developers who would be the great people to to look over code like this, right? They're talented in Haskell, and they know Plutus and everything, which is the programming language in Cardano. And they pointed out this vulnerability to them. MinSwap team tested it on their end. They were able to reproduce it. Cue the oh shit moment, and then they announced a deep maintenance on the website, and they kind of froze the withdraw and deposit and activities on the DEX for 48 hours while they patched the bug. And I remember when it was going to maintenance, and I'm like, oh, that's interesting, right? I'm going
a little worried, right? Were you a little worried at the time? Yeah.
I mean, at the same time, they kept saying maintenance. So I was like, well, it must be fun if it's maintenance, right? Right? And I was like, am I getting rugged? Like, I don't know. I wasn't too worried at the time. I was kind of more, I don't know, maybe naive, and I was like, I'm sure it'll all be fine, guys.
Yeah.
And it was. But it very well could have been like, oh, it's in maintenance, and then
forever in maintenance.
Exactly, like 48 hours later, that everything goes offline, and there's silence, and everyone's been rugged.
Website not found,
Literally, but that's the key of decentralization, right? Is that in theory, if it's sufficiently decentralized, you can't just rug on people, right? You can't just take the site down for maintenance for 48 hours and rug on people.
That's not
right?
true decentralization then.
Exactly, right? And that's sort of the goal for all DEXs, right? You can't just take down SushiSwap for 48 hours, right?
No.
For maintenance, right? It's not how that works.
Yeah.
So anyway, so 48 hours goes by, and then they lift the maintenance and activity resumes, and they go, so by the way, guys, while we were down, we were patching a vulnerability that could have drained the entire liquidity of MinSwap.
Wow.
Right? And it was like, you what? Like, excuse me? And I was like, wow. So then over the next day or two, there were more medium posts written, like blog posts, talking about what happened, how it happened, and why. Now, MinSwap was audited a while back, actually. So in theory, this should have been caught, right?
Oh, in the audit. So was it visible in the audit? Did the audit say?
No, so the audit missed it.
The audit missed it.
Which is a pretty big deal because audits are generally very good at their job, right? Like they're excellent, they're experts in the code, in that language. they're supposed to catch these things.
Yeah.
Right? And they didn't. That's why we pay them to catch bugs like this.
Who did the audit?
I don't remember, but it was a firm that was specific to doing audits for Cardano and for like the Plutus Haskell stuff, right?
Okay.
So it was very specific to them. It started with an L, I think. But anyway, they wrote a post that was like an autopsy, right, on what the bug was, how it worked, and why it didn't get caught. Basically, what I understood from it was that when you delegate to a pool, you mint an NFT that represents sort of your access to that pool, right? And then that NFT comes with LP tokens, and those LP tokens you stake or you do whatever it is you want with them, right? But it basically in order to separate you the address from from not duplicating yourself over and over, it gives you an NFT and it checks for that NFT.
Right. Okay.
Right. The problem was that the code that checked for if your wallet had that NFT in it didn't also check to make sure that there weren't other NFTs being minted in the process.
Oh.
So what the hacker would have been able to do is delegate to a pool. That smart contract creates an NFT. But what they didn't check for was that there weren't also being other NFTs minted with the same signature at the same time. It only checked that there was an NFT. And it goes, is there an NFT? Yes, correct, great. Does it check for more than one NFT? No, it didn't check for more than one NFT. It just checked for if there was an NFT.
Oh, wow.
Right?
Okay.
So then what the hacker would have been able to do is mint multiple NFTs at the same time.
Yeah.
Right, in that same contract, and then be able to use them to delegate it. So Victor has pulled it up. There's it's not the same audit firm, but that's the same style, right? Is they go and they audit these blockchain firms and these projects. Anyway, as I was saying, you create multiple NFTs at the same time, and then what that allowed you to do was duplicate your stake in the pool. So instead of having an NFT that represented a 2% stake in the liquidity pool,
also you get higher
I could
stake
have
then.
2% and 2% and 2% and 2% all the way up to like 100%.
Does it going to go past 100 or no?
Well, in theory, but there's no money for that, so you can't create the money out of nowhere.
Yeah. So go all the way up to 100, and like that.
And then
that's
that
it.
would allow you to then you would basically be able to delegate the entire value of the pool. Like you could sorry, not delegate. You could
just drain it all.
Yeah, you could basically
take it over,
flood the pool
with
capital, and then withdraw everything.
Wow.
Right, you would be able to flood the pool, but you would only be able to steal one of a particular kind of token. So in this case, for example, let's say it's ADA and Min, right? The token for MinSwap, right?
Yeah.
ADA, Cardano, and Min for MinSwap.
Yeah.
So in this case, you would be trying to drain all the ADA in the pool, right?
How much money could that be, like roughly?
Oh, $45 million probably.
Wow. Okay, so it's a big amount then.
At least $45 million.
Wow. Okay.
Because it was a big pool. And so, and don't quote me on that number. That I'm only guesstimating that number.
Okay. Yeah.
But it's at least that. But anyway, so in that case, what you would do is you would flood the pool with fictitious Min tokens. So then you're able to withdraw all the ADA tokens. Because you'll be able to, you would delegate, and then you would withdraw all the ADA tokens. You would totally just flush it out. All the stuff that actually had the value, you would flush out. You would take it all out. And so that would have drained, it would left only Min in the pool, and that would, completely destroy the DEX completely, right? You would drain the entire liquidity of the DEX out.
Right.
And so, the Wing Riders, they found this vulnerability. They reported it to the MinSwap team, who tested it, had their freak out moment, put the site in maintenance, patched it. In fact, they actually used this vulnerability on their own to move it to a contract, to move all the liquidity to a contract that didn't have the vulnerability in it.
Okay.
And that's something that you actually see across the space when there's a really scary vulnerability. It's usually vulnerability that lets someone drain all the money out of a smart contract.
Yeah.
So that smart contract is bad, and you can't use that smart contract, right? Because it's got a bug in it.
Right.
But once a smart contract goes onto the Ethereum blockchain, it's there forever.
Right.
So how do you fix a smart contract that's on live, that's on the mainnet, right? You can't just go in and write a patch into the exact same smart contract.
You gotta make a new one then, right?
You have to make a new one
And then kind of
without
merge
the bug,
it over, right?
and you have to merge it over.
Yeah.
So sometimes that's a very expensive process, all right, and a very difficult one. You need all these multisigs and stuff like that. But
Yeah.
more commonly, what you see is that if there's a vulnerability that lets someone drain all the money out of a contract and they know about it, they'll write the new contract that doesn't have that bug,
Yeah.
and then they use the vulnerability that was reported to them on the old contract so that they can then move the liquidity into the new contract.
Okay.
Right? So you use the vulnerability yourself to move it over. So in this case, the MinSwap team did that. They duplicated their NFT. They used it to then drain all the liquidity out of the smart contract that was in existence, move it over
okay.
to a patched version, like a patched contract. And then they can't use the vulnerability anymore.
Also, they did the hack themselves.
Yes.
To move it over.
Yes,
Oh,
that's
wow,
exactly
okay.
it.
Yeah.
They did the hack themselves because it's a very convenient way actually
Yeah.
to move all the money over. Is you use the thing that the hacker would have done
Right.
to move all the money over into the safe patched smart contract.
It makes sense because it's like decentralized, right? So it's tough to like you say once the
Yeah.
contract's up,
You
you
would have
can't
to
just
persuade everybody to like withdraw their tokens and move it over to a V3, you know, and
Yeah.
like do it again, like a V2 version, right? And that takes time and it's painful and nobody wants to do that. So it just makes more sense just to use the hack to move it over. And then nobody has to do anything.
Yeah,
right?
and you don't have to let people know that you want to cause like a some
Well,
sort
I
of
mean,
panic,
if you're
right?
paying attention, it's all on a public blockchain. If you're paying attention, you could probably see and you go, hey, that's funny. The website went down for maintenance and now all the money's moving to a new smart contract. What the hell is going on? Right?
But
So-
is it better to do that or better to have a public announcement say,
Much
hey,
better to do
can
this as
everyone
well.
move their money out?
I
'Cause
mean-
we have a vulnerability.
Here's
here.
the thing: if you do that, you are going to risk that people are going to take their money out of the smart contract and not put it back in.
Right. You
So
have
they
less
take their money.
customers then,
They say, "Oh, can you pretty please move it over to this new smart contract?"
Yeah.
Well, I don't trust you anymore, so I'm not going to. Right,
Yeah.
and that's the way to kill your decks, right?
Right.
To kill
And
your
then
whole
now
project.
you're attracting hackers like, oh, there's actually a vulnerability here. Like
Literally.
let's look for it.
And
you
in
know?
fact, the moment that you make an announcement like that, someone is going to use that hack and like rip it out.
yeah, exactly.
So you had to have a new solution, and that solution generally is just to use the hack to move it over,
Oh,
and that's been done before.
right.
Yeah, so that's how they kind of saved MinSwap, and once that came out, then there was this whole thing. But they paid MinSwap paid Wing Riders a bug bounty. They compensated them for finding this vulnerability.
Oh, really?
So
How much was it?
They didn't disclose. They
More than
didn't
$50,
disclose.
right?
I would hope. But they didn't disclose how much, but they did pay Wing Riders. They compensated them for finding this bug. So all in all, this is a feel-good story. In fact, I think it's the only feel-good story we're going to talk about today, I think.
Yeah, because it doesn't happen often where you find such a big like
Vulnerability,
potential
yeah.
hack that could happen.
There was one in
You know?
Coinbase too, but I don't know all the details on that. But there was a vulnerability found in Coinbase. That guy didn't get very much money for
Oh,
his.
okay.
So that was like a drama a little while ago.
When was
But
that?
I don't know all the details though.
A few years ago,
unfortunately.
right?
No, it was like last year, I think.
Oh, last year.
Last year in the fall, I think someone found a vulnerability in Coinbase and they got paid. It was like a $4 million. No, how many millions? It was like many millions, and they got I think they got like $200,000 compensation for it, which sounds really great on the surface, but it was like millions and millions of dollars from an established, wealthy exchange. And overall, people thought like, yeah, it's kind of not very much money for the size of the vulnerability that they found,
But
right?
it's still better. It's still pretty good though.
It's better than a hack.
Better than
right?
$50.
It's better than a hack.
And
right?
$50 better.
It's better than $50. Yes, it is.
Yeah.
So yeah,
But you're right though. For a big company like that, like they're one of the biggest in the states right now, like for sure.
yes, they're publicly listed.
Publicly listed on the stock
Like,
exchange.
I
too,
don't even think there are any other crypto exchanges that are publicly listed, right?
I don't think
Not
so.
Gemini, not Kraken, not KuCoin, none of those. Not Binance, although I don't know where Binance would be legal because.
No. Yeah.
But yeah, no. So Coinbase is publicly listed, one of the only.
I know for in Canada here, one of the exchanges, Netcoins, they're actually one of the first publicly, fully regulated with a public company.
Yeah, them and BitBuy are publicly
Yeah,
regulated.
I think
so
I
that's
think two of
cool.
them. Yeah, so that's interesting. Yeah, but here in Canada.
In
so.
Canada. Well,
Yeah.
Canada keeps adding these rules into the system, so it'll be interesting to see where that goes. I'll lead that into another hack that I wanted to talk about today, which was the Wormhole Hack.
Wormhole.
And Wormhole is the name of a bridge between Ethereum and Solana. And that was hacked, I want to say last year.
I think so. It was.
I want to say last year. I
You know,
could be wrong.
Years have been going. The time has been going by way too
Yes,
quickly. You know,
it has, right? Time flies in the blockchain space.
it just feels, or even just in life in general. You know, like it's been going really fast. You know?
Okay, old man.
Let's back to the conversation though. Yeah. So yeah. So,
Okay,
so what
boomer.
happened though?
So yeah, Wormhole. So a while back, the Wormhole bridge between Ethereum and Solana was exploited on the Solana side. So all the Solana was drained out of that bridge. The Ethereum was stayed put. And in that case, there was a slightly different story from what we've seen before. It was not a multi-sig wallet. It functioned as correctly, but there was an oversight. So in this case, in this type of bridge where you have two cryptos that have smart contracts that are different from each other, right? Solana smart contracts are not inherently compatible with Ethereum smart contracts, at least not without extra steps.
Right.
They're structured differently. So how do you bridge assets with contracts from Ethereum onto Solana, right? You need to do, you would want to be doing some kind of conversion, right? Or emulation. So that's what they did, is they kind of emulated the Ethereum virtual machine. So they tried to replicate all the contracts that would be occurring on Ethereum. They tried to replicate them on Solana.
Okay.
So let's take the kind of contract, and this is kind of how it got hacked. So the way that the bridge worked is that if you had a contract on Ethereum that was running, it would get, when you bridged over a Wormhole into Solana, the way that the bridge worked is it kind of just went, I don't understand what you're doing on Ethereum, so I'm just going to do it, and I'm not going to try to understand it. I'm just going to recreate it as it is.
Okay.
So, you have a wallet that's going to send, that once you bridge, it's going to send money from A to B.
Yeah.
Right? You're going to send some money to Victor via your smart contract on Ethereum, and you bridge that over to Solana. Solana goes, I don't know what you're talking about. You're speaking a foreign language, but I'm going to send the money where you tell me to send the money.
Oh, okay.
Right? So in this case, you send the money over to Victor. Everyone's happy, right? It worked. You sent the money on Ethereum. You would have sent the money on Ethereum. You could send it on Solana.
But Solana doesn't. But Solana doesn't know how it's working.
Solana doesn't really know how it's working.
So it's just doing it. But
It's taking it at face value.
So right there, you see a problem. The problem could
Exactly.
arise, right?
The problem
Yeah.
could arise, but everyone goes, well,
It's working though.
it works, right? It
Yeah.
works.
It's like a car that it's just it's the engine's breaking down. That still works though. but
Exactly,
It needs an
right?
oil change though, right?
It's kind of like, if you were trying to buy or sell something in a foreign country and you don't speak the language, right?
Yeah.
You look around and you see guys, maybe you're buying mangoes or something, right? And you see that some guy says some words in a language you don't understand, gives a guy $20 of money, right? And he gets a mango from that. And you go, I don't know what that guy's saying, but he gave him $20 and he got a mango back, right? So if I want to do that, I know that I can go up to this guy, hand him $20, and he's going to give me a mango back.
Yeah.
Right? That's the idea. Is
Right.
I don't know what he's saying, but I can see that he's handing him $20 and getting a mango back, so I'm going to replicate that. That's how the smart contract kind of stuff works.
If it looks like it works, then maybe it does work.
Sure, and that's what they said. That's what the assumption that they were running under, right? But they don't know what they're actually saying.
Right.
They don't actually know what's going on because they're emulating,
That's a
right?
problem.
It's not a native contract. They're emulating it.
For in code, that's a problem.
Yeah. So what happened is the hacker had a wallet that was pointing to a wallet that was harmless. So in this case, you're going to send money to Victor, right? But let's say Victor's fine. You can trust Victor, right? But when you bridge over to Solana, there's another Victor already on Solana that isn't this one. It's a different Victor. Same name. Looks like the same guy.
Okay.
Right? It looks like the same guy.
Yeah.
So Solana goes, oh, you want to send money to Victor? That Victor, right? And you're not around to tell him that it's the wrong Victor, right?
Right.
So Solana does its job. It sends the money to Victor.
So this is
but it's the wrong Victor.
so relating back to the mango stand. It's
So
like
the mango
it's like
stand.
you give money to the guy beside the like. Oh, I'm gonna go to this other guy.
It's
instead.
like you go to the mango stand, you give him $20, and you get a mango back. But what you didn't realize in the conversation is that that guy is only a middleman, and that money's going somewhere else, right? And it said, I'm going to give you
okay.
this money in exchange for a mango, but you're going to go pay the mango supplier, right? And the guy goes, yeah. And so in this case, you gave money to the guy for the mango, and the guy goes, sweet, and he keeps it.
Right.
And so you didn't know that something went wrong, right? Because you weren't looped in on the actual conversation because you didn't speak the language.
You don't know what's going on.
You don't know what's going on. And then the supplier comes back and he yells at you or whatever, right? You can take this analogy as far as you want to go.
Yeah.
But in general, what happened here is the contract pointed to a wallet that was harmless on Ethereum. And I don't even know if it was a wallet that actually existed. But the whole idea was that it didn't mean anything when it was on Ethereum. And then when the contract was ported over to Solana, it pointed to the wallet that held all the money in the bridge.
Oh wow.
And so what they were able to do is on Ethereum, it said, take all the money from this wallet that is on Ethereum. Take all the money from it. You know, I'm going to send an approval signature, and you contract are going to take all the money that's in this wallet and give it to me. So on Ethereum, this was harmless, right? Because that wallet, I don't even know if it held a balance, right? It wouldn't have mattered. If you did it on Ethereum, it would have been okay.
Right.
But they constructed it in such a way that once it was ported over to Solana, the pointer pointed to the wallet that held all the money in the bridge.
Wow.
And because the bridge was going, I don't know what you're saying, I'm just gonna run it anyway. It ran the contract, and it pulled all the money out of the bridge.
How much was it?
Gave it $150 million, I want to say.
Jeez. Wow.
So really big, not as big as the recent Ronin bridge,
Yeah.
but still very big. It was like at least $100 and something million that was drained on the Solana side, not the Ethereum side. So this created a bit of an imbalance where you have a lot of money still in the bridge on the Ethereum side, but it's all been drained on the Solana side. So all the Solana users were losing money here. The Ethereum, and that's where it gets really weird, right? So now you have all this Solana out there that shouldn't be out there, and all this Ethereum locked up that is locked up still in this bridge. And the hacker wasn't found, didn't give it back. So what happened? How did this get resolved? Because we're not still talking about it. So what happened? One of the venture capitalist firms behind Solana, I don't remember their name off the top of my head, but and it might have even been the developers of the Wormhole bridge themselves, but it was a very wealthy venture capitalist firm.
Yeah.
They paid the amount that was lost. So the $100 million plus that was lost, they paid it.
They paid it.
They paid it. They
Back to the
basically
users?
paid it back to the users
Out of their own
pocket.
Really?
And everybody was like, whoa, like you can afford to do that?
Wow.
And that really got people thinking like, oh my God, you can afford to pay for a hack of that scale. And it was like, man, these venture capitalist firms sure have a lot of money, right?
So
Billions.
so then how they make their money back? Is there any incentive? What was the incentive of them?
The incentive is if they don't, Solana suffers dramatically.
Oh, and they're already invested
So here's
in
the
Solana.
thing, right? They're a venture capitalist firm that invested in Solana.
Oh,
so let's think about this
okay.
for a second. And that now when you start to process
Yeah, it
it,
makes
it
sense
starts
now.
to make
Okay.
sense,
Yeah,
right?
yeah.
So you have a huge investment in Solana,
Yeah.
right? You have millions upon millions upon millions invested in Solana,
Right.
And a huge hack happens.
It's a sunk cost.
And you know that if that hack doesn't get resolved,
Yeah.
the price of Solana is going to crash. People
Yeah.
are not going to operate on it. They're not going to trust Solana, and it's just going to totally like fall down.
Yeah.
And it's totally going to fall down. So you as the venture capitalist firm are very much, it is in your interest to resolve this. And so if you have, let's say, 500 million invested in Solana, and you stand to lose all of it if Solana crumbles as an ecosystem because of this hack, maybe it's worth it to spend $100 million and save the day,
save
right?
it, right?
Save the day.
What do you think, Victor? Do you think this was the right decision for the venture capitalists, for them to pay to recover this hack?
Can you repeat the what they do? What do you, okay.
They compensated everyone who lost money on the Solana side out of their own pocket. So it was like $100+ million that was lost on the Solana side, and this venture capitalist firm that was backing Solana personally repaid everyone that had been affected by the hack. Like they paid back everyone who lost money out of their own pocket.
I think this is like a very good approach because it showed that the company, in this case the blockchain, is like willing to help the people affected, and it may raise a little bit of trust in some of the people that was affected, and but they also have to consider that if they are not gonna have consequences of by losing money in order to like invest in terms of security. Yeah.
That's a really good point. Yeah.
I want to just change topics slightly.
Okay.
I want to ask Victor about CBDCs and whether or not you think that this could possibly be an attack vector in CBDCs.
What I think about this is like right now we are looking into the technology that may be behind of these projects as central banks start to adopt these technologies. So what I think is like we right now we are learning about what possible outcomes in terms of vulnerabilities may happen. So when these central banks start to adopt the technology in order to do create value in the space, they will have some of a background to follow in order to like take decisions and verify these vulnerabilities. But definitely, it will all this experience will help them um, to make them more secure and resilient to attacks.
Do you think it makes a difference that CBDCs are like government's currencies versus like a private company, like, you know, that gets hacked, like like a small company like, Axie Infinity, or I'm sorry to say, but Axie Infinity, like on a global scale, they're a small company. In a crypto space, they're a big company, but global scale, you know what I mean? But like, does it make a difference if a private company gets hacked really badly like this versus a government's own CBDC currency getting hacked?
It's definitely going to play a huge impact on the government because it may affect the whole country and the possibly other people who relies on that currency as well, especially when it comes to a country that is a leader in the field, or a country that has a lot of investment depending on that crypto of that asset or that currency. So for that reason, I believe that there is going to be a lot of investment and incentives for people to actually find vulnerabilities if the government allows so. If not, they will need to have a committee that is in charge in finding like vulnerabilities.
Yeah.
But it would be ideal if it's yeah, they will need to like find a way how it may work. If it's like publicly or private, depending on on the government perspective.
Wow.
Yeah, I think it really depends on like how the structure of the network is going to be, right? Like if it's going to be, I think most central bank digital currencies are going to be private. So like it won't be publicly, the ledger won't be publicly like visible for anyone to like go in and see if there's any vulnerabilities. So I think for you make a good point. I think they'll have like probably like a community that's maybe private. They look for vulnerabilities and like they get rewarded if they do find them, because I think that's something that ongoing security and ongoing just trying to keep up with maintenance and trying to find bugs is always something that any tech company or any type of platform or network needs to continue to do, right?
What if a government CBDC got hacked to something similar? Let's say another $600 million hack, right? What do you do as the government to fix that? Do you pay for it? I mean, obviously you send your police and law enforcement to the ends of the earth to hunt these people down.
Yeah.
Right? But like, how do you fix this if you're a government? Because I feel like the answer, like if you're a company, it's a very different story than if you're a government. If you're a company, if you can't afford to fix that result, then you die. right? You close up business and you go under and everybody loses.
Yeah.
But if you're a government, you can't just like go out of business. You can't just
No.
stop. You have to keep existing. So what do you do?
I think the big thing is like central bank digital currencies will probably be more likely centralized, right? So it would be controlled, like like they'll have the power to, like, I would imagine, like, to reverse transactions if needed.
Wow.
So like because it would make sense, right? It's like a bank, like it's like your bank,
It's
right?
a hyper-centralized currency, right? Yeah.
Because let's say like the bank, if you accidentally send money or something, they can reverse. Sometimes they can reverse it depending.
Well, yeah,
They can reverse
but
transactions.
that's like so against everything in the blockchain that we know of, is this
That's the
sense of
thing.
immutability. Like
Yeah.
if you reverse a transaction, but there's been multiple blocks since then you have to reverse all those transactions as well. So if I accidentally send money using a CBDC and I want it rolled back, but 50 people have sent transactions before since the time that I found out that I screwed up and want it rolled back, you have to re-roll all those other people back, and they didn't do anything wrong.
Right.
And then they have to resubmit their transactions after I've done my correct thing, right? Like blockchains are designed to be immutable and to not be rollbackable, really, right?
Right.
And there's very big consequences when you do roll back. But
Right.
I don't know, maybe that's not a big deal for CBDCs. Anything's possible.
Would you
right?
say that's something that's important though for for a CBDC to have the ability to reverse transactions? Because if things happen, right, like if it's
I mean,
fully regulated,
that is the
government controlled currency, right?
Well, that's the thing, right? With CBDCs, I think it would be much easier on everyone involved if I sent an accidental transaction, rather than roll back the system.
Yeah.
They should send me the money back, the
Right.
person I sent it to, right? And so how do you enforce that? Well, that's where maybe you have like a law in which you can sue someone if they refuse to offer you any communication on how to get some money back, right?
Right.
That feels like something better solved in the social sense, in like the off-chain sort of real world, rather than on-chain, because on-chain it would just be so unfeasible to roll back transactions, right? That's the whole point of a blockchain, is immutability. So it'd be much better to get a refund than to reverse the transaction.
Right.
I mean, you can still see this even in our current system too. Like, with, let's say, those Interact e-transfers, right? You can reverse them if the other person hasn't accepted them yet,
Right. Okay.
right? But a lot of people have those auto deposits,
Yeah.
right, set up. So if you auto deposit and you send a transaction to them and it gets deposited, you can't reverse that then. Right. There's no reversing an Interact e-transfer once it's been accepted.
Could you call someone and be, hey, like I accidentally? There's
You
always
could
something I
call
thought about.
them. You could email that. You can email them because you won't have their phone number, but you have their email because you sent it somewhere.
But what if you accidentally sent it to someone that you just don't know?
Then you have to say, "Hey, I accidentally sent you this money. Please send it back."
Oh, to the person. But
the person.
can you contact the bank if they don't reply?
Maybe, probably not.
Also-
You did send it to them, so legally, like,
Usually in some banks, when you send the money to a specific account, the name of the person attached, it appears as a auto deposit, and it shows you a notification with the name of the person. But I don't know if that's the case for all banks. I guess that would be like a security measure.
Yeah.
But in my case, for my bank, when a contact or an email address that I want to send money has auto deposit, it says like a warning. This
Right.
person has
Auto
auto
deposit.
deposit. So, are you sure that you want to send the money or something?
Right. Okay. So that money's gone then if you accidentally send that.
well, you just have to hope that the other person is a kind soul that will return it.
It's just like in blockchain. If you accidentally
It's
send
exactly the same in blockchain,
if you
baby.
if you accidentally send it to the wrong address, then you're
You have to hope
out of
that
luck,
they'll
right?
send it back,
Yeah,
right?
you gotta hope, right?
Yeah, you gotta hope.
Yeah.
So, and if you send it to someone who's a scam, well, that's how you get scams. Scams are very common in crypto.
Yeah.
Yeah.
I would like to touch on like I think a good scam is like the Twitter, those addresses. It's like, oh, please send me this. No, not please, but if you send me this, we'll give you back double, you know, or
Oh,
maybe
the
more in
doubling,
return, you know?
right?
Yeah.
You know, send
The
us in,
classic,
send
you
us
know?
would be doubled. Yeah. Yeah, no, that's a classic scam, and you know that's why in security they say that like the human element is always the weakest, right? It's usually much easier to attack humans than to attack the code, right?
Yeah.
Pretty much always. So
Yeah, I think the most notable one is in 2020. It was, yeah, in the summer of 2020, a lot of the Twitter accounts of like Elon Musk, Joe Biden, Barack Obama, I forget who, I think Jeff Bezos too, Bill Gates, all at the same time got hacked.
wow,
And then they had like it was only up for 10 minutes. They took it down really quick. But it was like one of those addresses you send, you get double in return.
that's fucked up.
I don't know, but they actually caught the hacker too though
Oh wow,
from this. Yeah.
that's awesome.
They only made 500,000. They made 500,000 in 10 minutes from these hacks. But since it's blockchain, you can see with the address where all this money went.
Right.
And then they were able to catch the person, and they were in Florida, I think.
Wow.
They actually got, yeah. It was actually a young guy too. It was like, I think he was 19 or 20,
Gee.
but he got caught though. So yeah,
Oh, that's good.
it's good. Yeah.
Gosh. Yeah. Yeah. Those scams will get you.
Yeah.
There's a lot of scams out there. Have you guys ever heard of dust attacks?
Like they throw dust. What's a dust tag?
Oh, I actually want to speak about those ones. So it's basically when you get a wallet. So every time you create a wallet, if you have joined to an airdrop or any other like place where your wallet is publicly seen or given, you may be susceptible to receive random tokens from different companies that are like developing projects or even hackers. So if you have a wallet and you are expecting like coins happening, some of these coins may not be like, or tokens may be not be part of the airdrop, or it may be part of an attack. So basically the hacker sends random coins to your wallet for you to accept those tokens. And these tokens are basically, they worth almost nothing. They're very, very small. But what the hacker wants to do is you accept it in order to trace your wallet and eventually take over your identity and with it, your wallet. So they basically try to like first know who you are and then eventually take your private keys.
Wow.
That's wild.
Yeah. And they can like, and yeah, and it really also, there's a lot of variations too, where they'll do different things. Sometimes they'll have you sign up for a website, like you'll go, oh, what's this token? And you type it in Google, and then on Google up comes a website, and that website says, you know, send your tokens to this address, and then you'll get like paid out in USDC, or you'll get something for it. But then it's almost always some kind of scam to get into your wallet, get your keys, right?
That's not good.
Yep, yeah, that's right. Not your keys, not your crypto.
Not your keys, not your crypto. So hang on to your keys.
That's right.
It's like if you lose your key to your house, right? Like if you just,
Well, sure. Yeah.
you can't open the door, then it's still your house, I guess, but you can't get in.
Yeah, exactly. And then other people can, right? And
Right,
that's the worst
yeah.
part.
Because the worst is if someone we're in an apartment place here, if someone can climb up onto the balcony and
You just gave away our location. We're gonna get broken into.
the back
now,
door,
Riley.
right? They come through the sliding door.
Riley, we're gonna get broken into now that you just talked about all these specific things.
See, that's the most important thing. The most important thing is never give out anything of your private keys.
That's right.
Right? 'Cause
Not your social security number, not your address, and not your private keys.
Exactly. Yes.
Yeah.
Because you made an interesting point. Like if you know just 3 or 4 words, right? You can generate the rest of your private key, or
Yeah, there's companies out there, particularly for Bitcoin, because Bitcoin's is 12 words.
Yeah.
If you know 3 words or more of your seed phrase, then they will brute force the rest for you. So say
That's
you
wild.
lost your keys somewhere, but you remember 3 of the words in order.
Yeah.
Then they'll be able to brute force them because with 3 words known, you've eliminated so many trillions of possibilities. So that it's actually possible for a computer to brute force it in a reasonable amount of time, right?
Wow.
Of course, this is a company, their business, they'll charge you for it.
Yeah.
But it's a way to recover your wallet without knowing the entire seed phrase. You just need to know enough words for the rest to be brute forceable.
And how much does it cost if
I don't
someone
know,
wants to?
but,
Oh, okay.
but we actually, that's a good point.
Yeah.
I think some of these firms, like generally speaking, when it comes to recovering hacked funds that are lost,
Yeah.
a good number is you do a certain percentage of the funds recovered.
Oh, okay.
So maybe that's like a 5% of funds recovered or a 10% of funds
It's
recovered.
it's worth
right?
it.
So say it's like, if you have four Bitcoins that are locked away in a wallet from 2011, right?
Yeah.
Then you'll pay over 10% of that or 5% of that to a company in exchange for recovering your funds for you,
That's worth it.
right? So it's
Yeah.
a different price for someone who has 4 Bitcoins versus someone who has a 1% of a Bitcoin, right?
Right. Yeah.
So it's a different pricing schedule for different people, right?
Right. Right.
So I want to kind of get on to another hack that was very famous throughout history. It was the famous Ethereum DAO hack, right? Because nowadays we have lots of DAOs of all shapes and sizes, many DAOs, but they all started with the DAO. It didn't have any other name. It was just called the DAO.
Just a DAO way back in the day.
Right, and this was really early in Ethereum's history. It's early life, and back then there weren't really dApps. You didn't really have DEXs. There wasn't a whole lot you could do with Ethereum. You had all this programming power, but not a whole lot you could actually accomplish with it.
This was 2015, right?
It's like
Roughly?
2015, yeah, somewhere
Okay.
around
Yeah.
there.
Yeah.
And it was like there wasn't a whole lot you could do with Ethereum. There weren't dApps or DEXs. So when people heard that there was this DAO that was starting up, it was like really interesting, and
Yeah.
it just got people very excited. So the DAO held a token sale, right, to raise funding for the DAO, so that you could pay people and then you could accomplish things.
Yeah.
And so they held this token sale, and they were expecting to raise 10 million, maybe 15 million at most. They raised
Was it over 100 million?
it was way over that.
Or no, 400 million, I think.
Now Ethereum wasn't worth very much at the time, but it
Yeah.
raised I don't have the exact number written down, but it raised 15% of all ether in circulation at the time was sent into this DAO,
Wow.
right? Into the smart contract that held the money in the DAO.
That's crazy.
It was millions and millions and millions of dollars, even then, way beyond their original expectations, and it's worth like 11 billion now. I think it was like few hundred million at the time, and it's
Yeah.
worth 11 billion now.
Wow.
It was 15% of all ether in circulation.
Wow.
That was contributed, because again, it just got people really excited. Like, what else are you gonna do with your ether? Then put it in the DAO, because that's one of the few things you could do with it at the time.
Yeah.
So it had people very excited, and this is a brand new project. Now the DAO was, by modern standards, very basic, and it had a lot of problems, and there wasn't a whole lot you could do with it. It was very simple. But there were problems in it that people noticed early on. One of these problems was that withdrawing the funds was really difficult. Okay, in order to withdraw funds from the DAO, they had this weird rule. The rule was you couldn't withdraw the funds if anyone else objected in the DAO.
Oh, really?
Everyone in the DAO had to agree to you to be able to withdraw the funds.
That can be a problem.
Well, when you have a DAO that has millions of members, right? You have $300 million in token sales, and you have thousands and thousands of participants. Not everyone is going to agree. If even just one person objects to you withdrawing your funds, you can't do it.
Oh, wow.
Which meant that it was extremely difficult to get your funds out. The only way you could get your funds out at the time was to make a child DAO. So the DAO could actually make a DAO within itself.
Oh, okay.
Right, so you had the DAO, and then you would have a child DAO. And the child DAO is exactly the same as the regular DAO, but it allowed you could move your funds between them. So you could move your funds from the main DAO to your child DAO.
Okay.
And you were the only member in your child DAO, so you could just withdraw.
Oh, okay, okay.
But if you had other members in that child DAO and then they objected, you still couldn't withdraw.
you have to make another DAO. Can you make another DAO on the child DAO?
Yes, you could. So
Okay.
you could just make these child DAOs and then withdraw from those,
Okay.
because you were the only member and there was no one to object.
Yeah.
That was the system, right?
Right, okay, yeah.
So this is all context. So then the DAO is a new project. You have lots of eager participants who are, doing this. And the whole child DAO process was very technical. So you had to have a lot of technical knowledge in order to be able to do this.
Oh, to make the
make a
child
child
DAO.
DAO, yeah.
You can't just log in and be like, okay, I want to make one.
It was not
Click a
easy.
button.
It's not like now, right?
Oh,
It was
okay,
very,
okay.
very manual, right? You had
Right.
to be a real software guy. You really had to know what you're doing.
Okay.
So, yeah, so pulling funds out of the DAO is very, very difficult. But anyway, so it's a new DAO, it's very young. People were some software people were noticing some flaws. And one of these was a Eastern European guy who was based in Singapore. And I don't remember his last name, but his first name was Toby. It was like Toby Hirsch or something.
Okay.
Toby Hench. It's Toby and it started with an H. Anyway,
Okay.
this guy was one of the contributors of the early DAO, and he was posting on forums very often that he was finding a lot of these bugs. He found a vulnerability here, he found a vulnerability there, he found over 30 vulnerabilities in a very short amount of time.
Yeah.
Like a lot of bugs. And some of these bugs were seen as being really kind of trivial. They didn't really matter very much. And in the end, they weren't bugs that were used to exploit the DAO hack. But he found a lot of vulnerabilities, and people weren't taking him very seriously.
Oh, so
Right.
they didn't take him really. He was
They were
telling
kind of
them-
like, there's this vulnerability, but that doesn't really impact that much money. It doesn't have any access to the original smart contract.
Oh,
it doesn't
wow.
do any of these things. It's kind of pointless, right?
Okay, yeah.
And realistically, you can't fix every bug that is in your code, right?
Yeah.
There's a very famous saying that, like a common saying that there's 99 bugs in the code, 99 bugs in the code. You patch one down, take it around. 110 bugs in the code. Like you fix one bug and you'll end up with 10 more bugs, right?
Right.
So you'll never be able to fix all the bugs in the code. So it's all about trying to fix the bugs that are important
Most
to you
important.
and that are more risky and more serious. And
Yeah.
it was seen that a lot of the bugs that this Toby found, he wasn't taken very seriously. That these bugs weren't seen as very important, and not very many of them got patched. It was
Oh, wow.
mostly ignored.
Okay.
This didn't sit very well with Toby. He didn't like being ignored, and he didn't like that people weren't taking him very seriously. Now, what I'm gonna say next is based on theories and is based on we don't have the actual evidence of it, but we are piecing this together from what we have seen and what the kind of character Toby was, and what and then what happened. So eventually, one of the administrators of the DAO woke up one morning and noticed that funds were draining out of the DAO. He got a message from a friend over Slack that funds were leaving the DAO in a very weird way. And sure enough, they were. A few thousand ether at a time was being drained per transaction slowly out of the DAO.
Wow.
They panic and we're going, what is going on? Why is all this money leaving the DAO? And when the attack eventually stopped, the attacker did not drain all of the money in the DAO. When the attack stopped, they drained 31%.
Still a large amount though.
They drained 31% of all the money that was in the DAO. Now remember, 15% of the entire Ethereum circulating supply was in the DAO at the time.
So that's like 5%.
Yeah, pretty much.
Wow.
It was like 5% of the entire Ethereum supply was drained.
Drained, yeah.
Right, in one day. And so, and that was by the time the attack stopped. So then, upon noticing this, the other developers in the DAO managed to use the attacker's own method to drain the rest of the funds out. Like we talked about earlier, they used the same method to drain the funds out and move them elsewhere so that the hacker couldn't drain the rest.
Be secure, yeah.
Be secure. So what was the problem? The problem was that the smart contract, when you went into a child DAO and you went to withdraw, the DAO would send the money first, then update your balance. It would send, then update, right? And that seems very reasonable, very logical. But what the hacker's smart contract did was it sent the money of withdrawing, then it interfered with the updating of the balance.
Oh, okay.
So it's like your bank account says that you have $300 in it, right? So you
Yeah.
withdraw $300, but then you screw with it so that it doesn't update that you've withdrawn $300. So
Oh.
your bank account still says you have $300 in it, and then you repeat withdraw $300, withdraw $300, withdraw $300, withdraw $300.
Also, it started draining money from just the DAO in general.
It would just pull it. It would just keep pulling it without
Wow.
updating his balance. So in this case, that's why it was a few thousand ether at the time, because that's how much he had.
Oh, okay.
So if you had 2,500, let's use the proper.
Oh, the
numbers,
balance
like-
that he had in his own.
So
thing on
yeah,
the
so
DAO.
let's say you contributed 2,500 ether.
Yeah.
Then using this method, you could withdraw 2,500 ether. Smart contract would prevent the DAO from updating that you had 0 ether left.
Right.
So it would keep saying that you had 2,500 ether.
And just keep withdrawing.
And you would just keep doing it. Transaction. You would just keep withdrawing 2,500 ether, and it would never update. It
Wow.
would never refresh and say, you don't actually have any money left, stop, right?
That's a problem.
So he drained 31% of the balance in the contract before it stopped,
Wow.
he stopped, and they were able to move the rest of the money using the same method into a different contract.
Okay.
So that's a lot of money, right, that he pulled out.
Yeah.
Right? That was, millions of dollars at the time. It's still worth many, many millions now, if not billions. And so the community now wrestled with, how do we deal with this? Because
Yeah.
this guy's got all this money, and he's gonna try and cash out somehow. So what do? Well, in the DAO hack, the idea was you had to create a child DAO to withdraw. But if anyone in the child DAO objected, you couldn't withdraw.
Right.
So in theory, he had drained all this money out of the DAO contract, but it was in his own DAO. It
Yeah.
wasn't in his own like Ethereum wallet. It
Yeah.
was in the DAO still, just a child DAO.
Yeah.
So he had all this money, but he couldn't actually pull it out and like sell it or anything.
Oh, interesting. Okay. So he couldn't fully access. He has it, but he couldn't fully
He
access
couldn't
it.
fully access it. It was still locked kind of within the DAO and stuff.
Oh, interesting. Okay.
So here's the deal. Let's say he tries to withdraw, right? He tries to withdraw 2,500 ETH. He creates a child DAO. But then white hat hackers, like good people, could go into his child DAO and stop him from withdrawing. They could object.
Right.
Every time he created a child DAO, you could go in and say, I object to him withdrawing.
Yeah.
In theory, if you were diligent enough, you could follow him as he goes and creates these child DAOs, and every single time he created a child DAO, you go in and you stop him
Right.
from withdrawing. Every single time.
Is that what happened? Or
Well, for a little while, they were trying to do that.
okay.
But the idea was like, okay, so we've got a team of people that would, around the clock watch for child DAOs and go in and stop him, right? You just around the clock, like a night watch, like a guard, rotating guard post kind of thing, right? To prevent this money from getting liquidated.
Yeah.
But this at the time was seen as an unsustainable solution, because if they missed it just once, if just once they weren't watching, and
All
he
that
got a
could be
child
gone.
DAO and then was able to withdraw, it would all be gone.
Wow.
Right? So you had to be constantly vigilant, and you had to have a team of people to watch the clock kind of thing, never knowing when he would create a child DAO next,
Right.
and have to be there every single time to
Wow.
veto it. And you have to be fast enough, and you have to be everywhere, and you have to watch him, right?
Yeah.
And so the proponents of what would later become Ethereum Classic were very much in favor of this solution. But the community at large felt that this was unsustainable. So how do you fix this? Eventually, the community settled on, they deliberated a bunch of different solutions, but the one that they settled on was a hard fork, right? And that is like the nuclear option. Because remember those rollbacks we were talking about earlier?
Yeah.
If you do a hard fork, that's what you're doing.
Yeah.
So they eventually decided to do a hard fork, and this was very controversial because at the time it was viewed code as law.
Yeah.
A lot of people still think like that. And so if you're altering the Ethereum, like you're doing a rollback, you're going against your first principles of immutability, that, what is on the code and what is on the blockchain is law and shall never be reversed.
Never be
right?
reversed. Yeah.
But here we're literally compromising the rules. We're making an exception because the idea is that the damage to the Ethereum ecosystem to let this go unchecked is greater than the damage if we change the rules,
Right.
right? The pain of this hack is greater than the hack of compromising our values.
Yeah.
That was the idea. Some people agree with that. Some people very much don't agree with that.
Yeah.
But they held a vote, and it passed, and they committed a hard fork. So they split the Ethereum chain. They forked off, and the Ethereum chain that we know today is the one that hard forked, and they all the transactions that had happened since the hack were reversed. The money that was compromised in the DAO hack was moved to a withdraw wallet, wherein the original owners of that ETH could withdraw their tokens, right? They could withdraw. And the hacker was left with nothing, essentially, in that version.
For that version of Ethereum, but Ethereum
Which is
Classic,
the Ethereum
though,
that we know today.
yeah.
The old version of Ethereum, because when a hard fork occurs, you just keep on going, right? There's a split, but the original chain just keeps going.
Yeah.
That version of Ethereum became Ethereum Classic,
Right, okay.
right? Which, of course, is today worth a significantly less amount
Than Ethereum.
and hasn't undergone all the same changes that Ethereum has, right? So, for example, Ethereum Classic will never move to proof of stake.
Yeah.
Ethereum Classic does not have EIP 1551. Ethereum Classic doesn't have all these like improvements and changes. They have some of their own, and some of them are similar to ones that Ethereum got.
It's just the classic of Ethereum. It's
Not classic.
It's just the original blockchain of Ethereum.
It's the original blockchain of Ethereum.
That's all
with
it is.
All of its faults.
Yeah.
And there are some people who still really quite like Ethereum Classic for their own reasons, but I wouldn't want to be on a chain where there's a whale with hundreds of millions of dollars of tokens that
Does
they
he still
wanna
have it?
sell.
Does he still have it then, the hacker on Ethereum Classic?
He was able to liquidate a bunch through. There was some services at the time that would let you. It was like a coin join that would mix transactions with Bitcoin, so you were able to liquidate it into Bitcoin. He's also apparently able to liquidate it into Grin, which was a privacy coin at the time. And there were other ways in which they were able to liquidate a bunch of it, but not all of it, not the vast majority of it.
Oh, but that was an Ethereum Classic, or was that when it was?
It would have been Ethereum Classic.
Oh,
yes.
when he was doing that.
Yeah.
Oh, okay.
So he would have been selling Ethereum Classic at the time.
Right. Okay.
So he was able to liquidate a good amount of it, enough to make you wealthy,
Wow. That's crazy.
but not enough for the whole balance to be cleared.
Yeah.
All right. And of course, people get wise, right? So these coin join services, they're not stupid. If they see someone with a very large account balance trying to use their services, they know it's probably a bad idea to be serving that customer, right?
Yeah.
So you can start to block their addresses and things, right? And it doesn't stop them, but it makes it more difficult.
Right.
So as time goes on, it gets much harder to launder this kind of money.
Yeah.
And so eventually you just kind of stop
Right.
if you're the holder of all these tokens,
So just sitting there.
to just sit there and try and maybe one day figure out how to liquidate it, how to launder it.
Right.
Or you get caught. And if you get caught, then you go from there.
Yeah.
But
So was
yeah.
he ever caught or no? Not caught.
well, caught is a strong word. He's never been apprehended by authorities. But Laura Shin of the Unchained podcast came out with a story a little while ago, which is where I'm getting all this information from. And she went into great detail on their research onto who they believe the DAO hacker to be, this Toby, who was head of a project 10x, and all of the story of the DAO and the hack and the fallout from it, how they know that these transactions were all linked together,
Yeah.
and what happened, right? So that is kind of the closest that we have to a identification of the DAO hacker, right? He's not been arrested yet. He might be one day, and we can all hope that he is. But yeah, it's a great story, isn't it?
Yeah. This is crazy how yeah, it's one of the biggest hacks back in the day, right, for Ethereum, and this is how that changed everything at the course of what Ethereum did, right? Like they had to do their hard fork and
It shaped the story of Ethereum.
shape the story for it. Yeah.
All these hacks and security issues that we have been able to discuss today have shown that when it comes to investing or when it comes to investing on these projects, we need to be very careful and know about the technology that we're gonna be investing for this reason, because only by understanding and knowing the background of these technologies, we can make safe investment, and we can take also this decisions. Another strategy that we can also see here is like a diversification in multiple projects is also a good idea, because if one gets compromised, well, you're still having another one where you can keep your assets as they are intact. Um, this also gets into a new stage. Okay, I'm new into the space. What shall I learn? Well, you have to learn the basics of the technology, which is blockchain. Eventually, know about how projects differ from each other, which projects create value, which uh, and which problems can be solved according to a specific projects. And yeah, so right now we can discuss a little bit more about like how we can make sure the or create have like less likely to like lose all these assets that we have.
But no, I think that's a great point, and just yeah, diversification. Looking at just making sure like you check to see what you're investing in, right? And do your own research. Like a lot of these, yeah, the good thing about blockchain is you can see on the ledger itself. You can analyze. You can do some on-chain analysis. You can see what's actually going on. And that's the beauty of blockchain, right? Is that you can draw your own conclusions and you can do your own research and what would be good, like good projects, what are bad projects, right? And where are things heading? So
Exactly, right. All is there for the taking, for the diligent, and that's the beauty of the space.
yeah,
As we wrap up today, we'll do another classic price prediction, because these things age so well. They age incredibly well.
Yeah.
And even when you look the next day, let alone the next week or a month in
or
advance,
months later.
they're horrifically out of date.
Yeah.
So for all the shits and giggles, where do you think the price of Bitcoin and Ethereum are going?
For Bitcoin, it's very hard to say, but I want to start with my prediction for Ethereum first.
Okay.
Um, right now it's around 3.5k. Based on what I've seen here and information about the second version of Ethereum coming, Ethereum 2.0, probably would say it may double its price to maybe 7k.
By
By like at the end of the year.
end of the year, okay.
Yeah.
I'm excited for the merge, and I think that that'll be a huge moment for Ethereum, especially because with EIP 1551, it's gonna move it from an inflationary asset to a deflationary asset,
Yeah.
at least in the short term. So that's really exciting, and that's gonna do something for the price. But I think that I'm still bearish. I still think we're in a bear market at the moment, and it's going to continue that way until about 2024 when the halving happens.
Also, you don't believe that this is a lengthening cycle?
I think it's
Possibly, or-
I mean, we might be in a lengthening cycle, and
Yeah.
I think a combination of the merge, right, and for Bitcoin, Luna buying up insane amounts of Bitcoin.
10 billion, I think
right?
they're going to try and do.
That's not a small amount of money. That's a very large amount of money
Yeah.
to be injecting into the Bitcoin market cap, right?
Yeah.
And taking it off exchanges, which is where the price is determined, right? You take it off exchanges, there's less Bitcoin on exchanges to go around, price is going to go way up.
Yeah.
But I think that is short-term spikes in a long-term bear market. I think that we're in a bear market. So even if the Bitcoin price goes up to like 55K, I don't think it's going to go all the way up to 100K. I think it might go up to like 55K or maybe even 60K again, and we'll be all like, woo, the bull market's back on, baby.
Yeah.
But it isn't. It's going to come back down, and I think that we're going to hover somewhere in 30 or 40K. Like we could even be at where we are right now. Everyone is bored out of their minds, and then 2024 happens. We get the next halving, and we start the bull market cycle anew.
Wow. So you think the next for Bitcoin to go over 100,000, you don't think that will happen until 2024?
I don't think so. I think the big run up happens in the next bull market.
Yeah.
Because in the bear market, I mean, the bear markets are tricky. Like I think we're definitely we're pretty far below our all-time high at like 69K. Nice.
Yeah.
But I think that like in the past it was very normal for it to crash like 90%.
Yeah.
And we've seen a 70% crash, but we haven't seen a 90% crash.
Right.
So I don't think we're crashing any further from here. I don't think you're going to see like a $20,000 Bitcoin. Right.
It's tough. It's to be tough.
I
Maybe it could touch it.
It
Possibly.
might touch like
Possible.
a 29 on a really bad day. Like if Putin launches nukes or something, then we get to like 29K, I think. But I think that because the bear market, like the bear markets are tricky. Like the moment that you think that it could, like that it's not the bottom.
Yeah.
I think it actually is the bottom. Like I
Yeah,
think
exactly.
because like if the whole market is trending up, then even when it's like down,
Yeah.
when you're in it, it looks like a sideways movement.
Right.
So, it could be that like 38K is the bottom of the bear market.
So we could have already saw the bottom then.
Exactly. We
Yeah.
might have already even seen it,
Yeah.
right? And you won't know it's the bottom until you get back into the bull market and you go,
that was the
that
bottom. Yeah,
sideways
yeah.
movement, because the whole market is supposed to be trending up. A
Yeah.
down movement is actually a sideways movement, which is kind of confusing without a paper to like draw it out on.
Yeah.
But I trust that you get what I mean. But yeah, no, I think that we either have seen the bottom or we're living in it. I think we're going to go sideways for a very long time, and that is like
Really?
our
Wow.
bear market.
Okay.
And then I think we're going to go up in the bull market in 2024 when we get the next halving. And for Ethereum, maybe that's sooner. Maybe Ethereum has one more last hurrah with the merge.
Yeah.
But I think we're in the bear market, and I think this is the part where we stack and we accumulate at
Yep.
cheap prices.
Wow. Definitely it's very possible. We could be, but I'm on the other side though. I'm a Super Bowl, I think, for this year.
Riley.
I'm still staying true to my prediction for $400,000 Bitcoin for this year.
Bro, if we're gonna get a $400,000 Bitcoin, we gotta get 100,000 in like 2 months. Okay.
Okay. I wouldn't say it's possible we could, but I think for this month, upcoming month, for April.
You don't think we're hitting 100K by the end of April?
Okay, not in April. I think for April we can get to 55,000 at least for this
What
month.
about May?
May we could break all-time
I'm gonna
highs in May.
test your bullishness here.
So
What do you think?
we break all-time highs in May.
So we break all-time highs in May. We go up to like $69,000-$70,000.
Exactly.
In May.
Yeah. In May we break all-time highs.
Okay. What about June? How high do we get?
Summer is just a rocket.
Summer is a rocket.
A
Okay.
rocket. We're just blasting.
So when
through.
when in summer do we hit 100K?
Probably like mid-July, I would say, or
Okay,
early July.
okay,
Yeah.
Okay. Then August. So we're above 100K in August. This assumes that we haven't crashed at all since then. Do you assume that we're going to
Although
go back
there's
down?
gonna be drops.
I'm testing
there's,
this
there's,
all the way.
There's gonna be I think when we hit 100,000, there's gonna be a big sell-off
Right.
for sure.
Okay,
A lot
so
of people
we sell off at 100K. Okay?
big sell-off at
So
100K.
then we go down to like what, 80K?
80
70K?
briefly, just a pit stop.
Briefly.
A
get
pit
to
stop.
80K.
Yeah.
But then you say that the rocket still keeps going.
It's gonna keep
That's-
going. Oh, from there
Right.
it's gonna keep fueling. Yeah.
Okay. All right. So then when we get to September, where are we at in September?
September probably, because once you get to 100,000, the chances of it doubling is a lot more likely. So it's 100
It's
to 200,000.
more likely that we're gonna see it top, okay.
If you break 100, there's gonna be a
I'm
lot.
not sure if market cap really lets that happen, because in order to double at that amount, you'd need like trillions in the market cap.
That is true. That is true.
invested in, and then you need trillions more to go from 200K to 300K,
But-
and then you still want to get to 400K by December 31st.
But when we're in a super cycle like this, a super
cycle. Oh my gosh.
anything's possible. So like when you get into that big, momentum's your friend. So when you're in a big momentum move, hey, this is all just my fun and speculation.
I mean, listen,
I'm not serious about this. This is all just my own speculation.
Yeah,
just
and
for
I mean,
fun.
I
so.
believe in the $1 million Bitcoin thesis, but I feel like that's got to take like 100 years to get to $1 million, right?
I think maybe 10 years we could see it.
If every government on the planet adopts Bitcoin, maybe we hit like 500K. Maybe. I don't know. But hard to say. Bitcoin, there's only 21 million coins is not very many in the grand scheme of things, right? And when you have government budgets of billions of dollars, like, 10 billion is pretty small for a government, right?
Yeah.
So hard to say. Hard
Right.
to say.
But
I
my
don't know.
conservative view though is we break all time we break all time high in the summer.
Well, we'll be around and we'll check you on that. But anyway, guys, I think that's where we're going to call it today for this episode of Decent Talks. Thank you all very much for attending.
Thank you all.
Oh, thank you everyone, and have a decent day and be decent and thank you for listening to our Decent Talks.